Welcome to today's Silver Log. We're going to take a look at the inflation adjusted silver prices. This is a 220 year chart almost. And we are seeing silver on the lower end of this inflationary adjusted trade. And we're looking at the silver market today. The prices are at 26. People are trying to say that it's up too much. And well, I'm on the opposite view of the spectrum. I think that it's extremely, extremely cheap. And all of the charts tell this for me because, well, we had a big run to the downside. And markets can't go straight up or straight down. So the question is it finished going down within this chart? You can see how you're making this bullish time consolidation. Still got a long ways to go to digest these losses that managed to come into play. But like I said, once again, you can only go down so much on this chart, just as you can only go so high within this chart. Now, as far as the values, you can see we're well over 24. Why are we down here? And the answer to that is this is silver yearly averages, and the yearly average for 2010 is still under $20 per ounce. It's around 19 per ounce. So therefore, that would be the reason why, in reality, this is breaking out right now towards the upside. It's gotten above this high in here. It's even gotten above this previous level of support. We might make a move up towards this 50-year moving average. This is a 20-year average, so we'll see how that comes into play. But the next chart I'm going to give is the last 40 years, because when you're trading within multiple time frames, you're saying, you know what, I think I might want to go in long, but I'd kind of like to see only the last 40 years or so. And with that being the case, this is 42 years, which has a blue line, which is the 5-year moving average, a red line, which is the 10-year moving average. And on the way up, we had nice support here, and it skyrocketed. When we look at what happened technically after this big run, it was more of a time consolidation, which ironically came right towards the 5 average. Now, on the way down, it never found support here like you were hoping. Notice how the market went even below this 10. When it rallied up, it came to this 5, which thus reversed the trend. Again, up to the 5. It was resistant. So there's no reason to be buying silver at all anywhere on here based on this technical analysis theory of buying when it starts an uptrend. Resistance here, and this one was very interesting because it got above the 5, came back, and found support. Then the last move lower, during the 2008 panic, it went below the average, came pretty close down to the 10, and notice the liftoff that it has had just right in here, and it is now breaking out to the 26 level. These are monthly averages for the silver price. So now what we'll do is we will draw a line, a straight line around this 26 level, because this is very important information, or just something that seems pretty cool. And what that is by looking at this chart, everybody since this period here is in a winning position within the silver market when you adjust it for inflation, where everyone beforehand is in a losing position with the exception of this small gap below here, roughly 1972. And you can make a case that this is an inverted head and shoulders pattern. And based on the length of this inverted head and shoulders pattern, if we draw a level from here, that can give us a target up towards the 75 level as a possibility. And those are just quick little targets, not to say that's going to happen. But if you're looking to get into silver just to protect your wealth against inflation, then if you buy on this chart and the chart stays exactly where you get it at, you have protected your wealth, but by having gains above this line or this chart going north means not only would you be protecting your wealth, but you would be actually gaining wealth. For example, if you are buying products within silver today that cost 10 ounces of silver to buy something, and it ends up costing you 4 ounces later on down the line, that means you have gained within wealth on the silver trade. And that's what I've been expecting to happen. Now, as this market goes higher, these variables will also be going higher with it. The reason for that is because as inflation goes up, the previous values go up. This is what the prices were adjusted for October 2010 dollars. But when we adjust it to November of 2010 and March of 2012 dollars, these levels are going to go higher. So we could theoretically go up to $200 silver and yet only be up to here because of the inflationary trade. So thank you for watching this video. When I made this chart up, I got a little bit of goosebumps because this is an exciting pattern. If this was a one-day chart, this started at 9:30 and now we're at 3 o'clock in here, I'd be looking to think, you know what, I might want to get a position for the rest of the day because of the technical analysis and how these moving averages are starting to roll over. We're starting to notice some higher lows in here and higher highs. That is why I am very bullish right now within the silver market. And in fact, if you're looking for buying opportunities in here, you have this buying opportunity here, this one in here, and the last one that we had, you had a buying opportunity here, an okay one, and then of course this buying opportunity over towards here. So thank you for watching and have yourself a magnificent week. Bye-bye.